G'day there, Greg Canavan here, Editorial Director at Fat Tail Investment Research. I thought I'd just get in touch quickly. RBA just come out with its interest rate decision for the month of February. No real change to the actual interest rate, but there was some interesting bits in the statement. So I thought it'd be just interesting to go through a couple of those things and point out what it might mean for you as a stock market investor. So I guess the main thing initially is, as I said, interest rates, or the cash target rate, as they call it, left unchanged at 10 basis points, but it has decided to cease, I'll just highlight there, further purchases under the bond purchase program, with the final purchases to take place on the 10th of February. So that was basically the RBA's quantitative easing program that's been in place for a while now. So that's being wound up. But importantly, if we get down to the bottom, it says the board is committed to maintaining highly supportive monetary conditions to achieve its objectives of a return to full employment in Australia and inflation consistent with the target. Ceasing purchases under the bond purchase program does not imply a near-term increase in interest rates. And I think that's the important part of this statement. It's saying that, just because we're finishing with the bond purchases, that doesn't mean we're going to start to raise interest rates immediately. And it goes on and says, as the board has stated previously, it will not increase the cash rate until actual inflation is sustainably within the 2 to 3% target range. While inflation has picked up, it is too early to conclude that it is sustainably within the target band. There are uncertainties about how persistent the pickup in inflation will be as supply-side problems are resolved. Wages growth also remains modest, and it is likely to be some time yet before aggregate wages growth is at a rate consistent with inflation being sustainably at target. The board is prepared to be patient as it monitors how the various factors affecting inflation in Australia evolve. So I think the message from that today is that interest rates are going to stay low for probably longer than what the market was originally anticipating. Last week, we got a pretty decent inflation number that came out, and I think the market all of a sudden decided that the RBA was going to follow the Federal Reserve and raise interest rates really quickly. But I think the comments today suggest that the RBA is not necessarily concerned about that high inflation. They think that there's still a lot of supply side issues that are pandemic related, and that the supply of goods and services is going to pick up, and that will ease off any inflation problems that people might have been expecting. Just one other chart I want to show you going into this RBA meeting. So if you look at this chart, it shows the interest rate market's view on where the RBA's cash rate will be this year. So this is based on the market close on the 31st of January, so just before the RBA meeting today. And you can see here that it was starting to price in a rate rise around May or June. So at the moment, here's the RBA's official rate at 10 basis points. May, June, July, that's when the market's starting to price in these increases. If you look out to the end of the year, the market is suggesting, or yesterday, the market was suggesting that by the end of the year, the cash rate's going to be up over 1%, which suggests, we're looking at around about 4 rate rises of 25 basis points. My view is that, those expectations will come down. I've been saying this for a while to subscribers of my advisory. I think a lot of the inflation issues that you're seeing are transitory. They're related to supply chain issues. There's going to be a lot of supply coming. And I don't think economies are as strong as people think. There's a lot of fiscal stimulus that's going to come out of the economic system globally this year. And I think that'll probably keep a lid on demand as we move through into 2022. So anyway, good for the stock market. I think the market was up after that announcement. There's a lot of volatility and cross currents and headwinds going on at the moment, but I think from an interest rate perspective, if the RBA is not going to move too quickly, that's going to support stock prices from a fundamental perspective. And if you look at 10-year bond yields, which are the sort of, base rate for looking at comparisons to equities, the 10-year bond yield is still under 2%. So it hasn't really reacted to this fear about inflation and that should provide a bit of support to stock prices, especially the reasonably valued ones. All right, I'll leave it there for now. Thanks for listening, and we'll catch you again next time. Bye.